afternoon, ladies and gentlemen. Welcome to Urban FX. For all the new members, congratulations on taking the first step to get the education really needed to really turn yourself into a unlimited ATM. The only battlefield that you're going to have to face is your mental discipline and your being able to control your greed and being able to set daily goals, hit your goals, and stick to them. Not a penny more, a penny less type thing, because of course, we're in the market for long-term financial stability. We're not looking for to be financially free today and then back broke tomorrow. So we're looking to establish basically an everlasting profit growth system. So let me go ahead and I'm gonna just pick a random pair here, and I'm gonna give you a rundown on how to analyze a pair. Okay. For all the newcomers, pay attention, join the sessions, and I'm going to start going over in a lot more detail. Okay, first, when you open up a naked chart on when you log into your MetaTrader account, whether it's your live account or a demo account, any account will do. You're just Some accounts do vary with the spread numbers over here on the right hand side. Different brokers offer different numbers. Different demos offer different numbers than a live account, and so forth and so forth. Basically, different brokers offer different market prices. So you just want to stick with one that has the best market price for you to enable you to be able to establish any profit at all. Now, all the newcomers are, of course, being trained on fxglory.com. There's also another broker for more advanced users with a moving spread. FX Glory has a fixed spread. If you want know exactly what a fixed spread is, fixed spread is pretty much an ask and bid price that never changes. It's always one flat spread. Take a look at look up fixed price and low spreads, or an ECN broker. ECN broker is going to you're going to have the most advanced, most ability to profit on an ECN broker. If you guys want to take a stab at that and you're a newcomer and you're only on FS Glory, give me a shout and I'll get you in the right direction to go ahead and get that established. But let's go ahead, and what we'll do is just quickly we'll press Control G, that removes the graph. Control Y, that removes the day separators. Okay, it's going to separate the days on the hour and everything below. It's going to separate weeks on the and everything above on the daily, on the H4. H4 and daily are going to show you weeks. Weekly and monthly are going to show you the year. All right, so let me show you what a basic rundown. Now, what I would do is I come here to indicators. You're going to go to indicators. Trend, moving average, and we're going to select. We're going to set the period for 50, exponential, close, and we're going to apply that to the chart. You can make it any color. Go ahead and, if you can, just go ahead and stick to the colors I'm using now. Once you get familiar with it, you can change it up in the future. All right, we're going to go back to indicators, trend, moving average, 200. All the other coordinates are going to stay the same. We'll change this one. We'll make it white. All right. You guys follow along with me as best you can. If you need to, pause and stop and go with the player, with the video. All right, now this one's going to be 21. Let's make that red. Okay, and up here on the top of my screen, you see where it says bar charts. These are what bar charts look like. These are what candles look like. These are what the lines look like. Now you can customize all of these colors by going in here to properties and changing them in here. But for now, we'll just keep it simple. This is how you auto scroll your chart. This will allow, if you have both of them imprinted, you're always going to be at the newest minute or newest hour. But if you unprint them, you can come back and look into your previous data. If you overshadow it, you see it says shift to the end of the chart from right to border. Boom. You can adjust that with this arrow. Gives you a little more space on to the right hand side, but it takes away your previous data. Keeping this one indented would always keep the screen shifting with price. All right. But for now, we're going to keep both of them imprinted. Now, if you zoom out on your chart, we'll start with, let's do something like the hour. Let's start with the hour. Okay. When you have these bands close together, such as something like this, we can see that price. Now we're zoomed all the way out on the hour chart. You know what I'm saying? It never hurts to have more data, more than you need. You can never have too much data. Now, back to the basic support and resistance lines. Just looking at this chart, all the way zoomed out on the hour chart, will mark off our lines of support and resistance. One right, and we'll move this. We'll do it from left to right. All right. Now the market moves in 3 counts. So whenever it makes a trend, it's taking that trend off for 3 bursts or 3 waves, so to speak. Now when we're in tight like this, well, all of these moving averages are together, and price isn't really showing really a move like right in here. That is what is considered to be consolidation. Now, when in consolidation, what happens is price pretty much shifts back and forth, changing the spread. If you have a fixed spread, it doesn't really affect you. You can't really see the change. But if you have a moving advanced spread like with a broker like JAFX, you'll see the spread shift and do all sorts of little wicked stuff. Move back and forth from 1 to 20. 1 to 20, the spread is basically the number you have to achieve before you see profit. You know, when you automatically open a trade, you're going to be in the negative. You must clear the spread before you're potentially in profit. If you've ever placed a trade on your account, you know exactly what I'm talking about. If you don't, you will with your first trade. The lower the spread, the better chance you have of coming in profit. All right, so now basically what we did here was we zoomed out and we have a level of consolidation. Okay? After a level of consolidation, you will get a trap. Which is here. Also, you'll get M's and W's at peaks of reversal before the trend takes off to the next level. For instance, here we have got a W painted. This is a W over 3 days. 1, 2, 3. I know that because I'm on the hour chart, and these separators separate the day. Okay, so this initial uptrend cycle began on April 12th, about 3 weeks ago. Okay, now if you notice here, we rose here to level 2. This is pretty considered the first level of rise. Level 1 to level 2 rise. Level 1's here. Look how we drop back below or down. White to the high of here. Okay, so basically what happened here was we consolidated. People didn't know whether to buy or sell in this area. This happened. This was over like a month time. This was the whole month of March. Month of March didn't really make any noise. Okay, so here's the month of March. Break out to the low. Pull back immediately, right back where it started. Y'all see that? This is within 2 days. Drop down one day. The next day, it was right back where it started the previous day before. Then we get 2 more days of drop. Here, at the low of the consolidation. Now we're getting an uptrend. Level 1, peak. Here, retrace to the high of consolidation. Uptrend. Level 2. Retrace. Back to the 50. Notice how all these moves are happening on the 50. So when in cycle, if you're in an uptrend and you can identify your uptrend cycle, when you retrace back to the 50, if you're in the correct cycle, that is your best buying opportunity before the next level rise, below the 50 or at the 50, which is this aqua moving average. And you can pretty much ride that as a moving trend line up your 3 level count. So we have 1 level rise here with this peak. We have 2 level rise here with this new peak. And now we're getting level 3 rise. Now in level 3 rise, 9 times out of 10, you will get a triple top. Triple top spread out over about 3 days. So we'll see some consolidation right in here, and then we'll start to see an M pattern forming up in this area. So we have the W. Now, an up cycle, you can also think of it like this. You can break it down. W, V, V, then we'll get an M. That will complete a weekly cycle. In every pair, every situation moves accordingly with different variations to their movement. But the same concept. It's the market maker structure. The markets ran off of this. It traps traders left and right. But once you're able to identify how the market intends on moving, you don't move how the market wants you to move. You're pretty much mirroring the market. Now, like I said, now you're going to want to go ahead and take a look at these indicators. Just 3 moving average. Just 3. And actually, let me show you. Let me go ahead and get you guys familiar with the RSI. Okay. Now, this is the RSI. Now, notice how whenever price meets these points, notice where RSI price is at. Whenever price makes these dips, RSI price is typically headed in a northern position as well. RSI down here at the bottom is going to measure your momentum. The momentum of that trend. Or the base or the momentum of that previous candle as it closed. Each time you get a new candle, this is going to paint either up or down. Further down or further up. That's why I stress that it is very important to wait until whatever chart, whatever pattern you're looking for, wait until that candle fully comes to a completion. Wait until that candle fully completes before you move on and enter or exit a trade. Because anything could happen up until the close of that candle. So I'm not going to hold up too much of your time. I just wanted to get something quick out there. Ladies and gentlemen, if you have any questions, just shoot them to me. If I don't answer them immediately, I will get to them. Happy trading, and let's make the best of it.